All right, hello guys. I don't know. I just feel like dropping the breakdown of this video. Because to move to HBO3 fully, I just want to ensure you guys get divergence right. If not, HBO3 will just be like I'm playing. All right, HBO3 is very simple, but without the understanding of divergence, you are going nowhere with it. Divergence is simply absorption, absorption. That is, what is price doing? How are they absorbing at a level? All right, either at a support level or at a resistance level. So how are they absorbing? How are they absorbing? So majorly we had an initial divergence here, making this to be a word, making this to be, of course, a structure point, and it's an all point. So the question now is basically, how are they absorbing at the level here, at the liquidity, at the low here that is being taken? Because there must be full absorption before a reversal can happen. All right. So that's it. When you see people that use order flow footprint chart, this is what they are talking about when they are talking about absorption, telling you that they are checking. If they see, okay, they see momentum, but they see absorptions and they see maybe orders resting above. All right, so this is what they are saying, but understanding this on chart is not something you will see anywhere. I've never seen it anywhere. SMC does not know it. Nobody knows it. So this is where open range comes in, and this is my concept. This is what makes it different. This is what makes it something that it seems like, oh, everybody is talking about that this makes sense, this makes sense. All right. So you have been taught how to know the open range. I will not go over that. It is your job to perfect that. I've simplified that over and over. I've told you, go through my YouTube videos, go through my highlights on Twitter. Just click on my page, my profile, then you see highlights. Click on the highlights, the videos you find there. Go through them. Yeah, so you should. So I assume anybody watching this, even if you are new, should heed to that instruction and whatnot. So when a low like this is rated, what you want to do is you want to write out the coordinate of that low. In this case, like I said, you are the one to go and find out. We are in the same monthly range here. We were in the same monthly range. This low was formed in February. This high was formed in February. So we don't need monthly OR in that sense. Are they being, we have different months contributing to this low, which means that what contributes to this low is basically month. The month is not involved. The month is constant. So we don't need the coordinate of that. So what I mean by the coordinate, that is the open range of, so we don't need the open range of the month. The open range of February is a plus. It's a plus month. It opened as a sell here, open as a sell, price really high back. All right, you can see February 1 if you check downward. Price made the target and then it flipped. It flipped. So this is the flipped high. So it flips to a buy. So it is buyers that are there now. So they clear the high, they clear the low, and now they just complete their target. The buyers in February just, this is where they will complete their target. So it is still buyers that are in, it's still buyers that are in February. So they will, this is where they, this is futures, by the way. So it's likely they have completed that target already. Futures is lagging by 15 minutes. And for the open of futures, that is lagging. Okay, yes, they have completed it. It will also show the completion. All right, so they have completed it. They have made the target on normal currency pair. So on normal currency pair, they have completed it. So yes, it will be completed. So that is the cycle. So the buyers that took over would now complete it. So what is the coordinate here? Go and check, like I said, for the week, for that week, and always use futures. Always use what? Futures to get the correct pricing. Is that understood? Very, very important. So for the week here, we have this week, it was a positive week. That is, price open as a buy hour and it made a buy hour. So that is I'm writing the coordinate of this low. For the daily here in here, it was a negative day, D minus. For the session that formed this low, it was New York and it was positive, M plus. All right, so that's majorly it. We don't have news. The news we had there this was the low of the news we had there, which was FOMC, and that one has already been used since it was the news low that was rated here. For the absorption that happened here, you can check it. For this one, all that was needed, we were still within the same week for this one. So I don't need to write the coordinate. For this particular buy that happened here, it was just basically D minus. All right. And the news, since it was the news that was rated within the session, we don't need the session coordinate, the news substitute, the news opening range substitute for the session there. So the news there was M minus. They sold first during the open FOMC there, 8 p.m. Nigeria time. You can confirm that yourself. And for the day that came to rate it, it was D plus. The day opened somewhere around there. It was a buy OR day, D plus. And New York also, it opened around there. Go and check. It was a buy opening range, M plus. So what did you see? Remember, buyers absorb sellers, sellers absorb buyers. D plus, D minus, they absorb each other. M minus, M plus, they absorb each other. So that is why we could have that one. We could have that delivery, the pullback. Same thing happened here. But I won't be using this. You can use this to go and practice this sell here. All right. So for whatever I will explain here, go and use that to practice what happened here for this sell here. For this area, same thing, we took the swing sell, the buy, the absorption started happening, and we took it exactly on Thursday. Exactly on Thursday. I posted it on my page. So let me show you guys so that we can reference to it and it won't be like, oh, did he take it? Yes, I took it. So I posted it on my page on the same Thursday, and in fact, even though the target has not been met yet, I show how far the target will go. All right, so that I show how far the target will go. All right. I don't know why it's not loading. Okay, I don't know, it's not loading. All right, maybe I'll show that later. That my Twitter page is not loading. All right, so that's basically it. Yeah, that's basically it. So this is the coordinate of this low. Now, the first low that came to absorb it, note from the higher degree, the highest degree is weekly open range. That is the volume minus for the weekly. But the day that came to absorb it was D minus. The session that came to absorb it. So no, New York, it was New York. Let me use session, please. I don't use N for session. I just take it as session, S plus. So the session was S minus. Now, since the major one has absorbed, the major guy has absorbed, which is a starting point, the biggest guy has absorbed, that should tell you that reversal is creeping in. I don't mean it wasn't the one that absorbed yet. Maybe it was the day that absorbed along with the session. And meanwhile, we were in a new week here. This was a previous week, and this was a new week. All right, the new week opened here is sold first. It opened somewhere around there exactly. You can see Monday, you can see from the pricing Sunday to Monday, Friday, you can see it sold first before going for the high. All right, clear the low. cleared the high, then came to meet the target. So it has not flipped. This would have been its flip if within the same week price read it. W plus the minus S plus. And yeah, absorption, negative week, session. So the week and the session has absorbed each other, but the day has not aligned. Therefore, it means that that buy, even though the reversal has started creeping in, for some people that probably might not know, I think for even people that use print chart, some of them do not actually know the exact point or the exact absorption in this way. They just can read the data. And therefore, in that sense, they tend to maybe have big loss, stop loss. So for them, they are seeing orders. So they might enter here and their stop loss maybe might be below here or something like that. But for me, I know the exact day I'm coming in. I know exactly the exact day I'm coming in. I know here now that my day has not aligned according to the first absorption that happened here. So, but because we have large volume absorption, weekly minus, this is a visible trade for me to take, but I know we are coming back here. Now, the new day opened, another day opened, now we are at the new day. It opened as a sell, but later flipped to a buy. This was the flip point. Go and check it out. I've taught all these things, like I said. And so I won't go over that, not to make the video unnecessarily long. So it flipped back to a buy. So it was buyers that took over here on that day, and they were the one that makes this that create this move. So not every sell move is created by buyers, and not every buy move is created by sellers. Very important. Any of the party can create any of the moves. All right. So now we now have D plus. So D plus now, okay, to complete the absorption that started at this low, because that's what was missing. In this case that I told you guys to study, it was the session that was missing. The day has already absorbed, because this was D plus. This day here that came to absorb this I here was D minus and the likes. It was only the session that aligned that couldn't absorb each other. So price has to open for the next day, and then London of the next day opened as a buy opening range to be the absorber of the sellers that are there. All right, before the reversal, before we have full absorption and the major reversal could happen. Is that understood? Same thing here. Right? Right. D plus. Then on that Thursday itself was when I took the trade. Very, very simple. Okay, so that's just it. I have said a lot in this video, but if you are the type that you are a complainer rather than sit in trading, is hard. So when you just sit and just be like, oh, your concept is hard and the likes. When you are given something for free, the best thing you want to do is to stick to it. When you know that what this person is saying, and I've been showing you guys, even in live trade, I've given trades live, swing trades that run through 2 weeks, delivering more than 2,000 pips in total since I joined Twitter in October, that I've given for free. All right, that I've given for free. So yeah, so that's basically it. So yeah, this is where I uploaded how my trade is going. Let me share that now, since my Twitter has now opened. This is it. This is it. Though when I was making this video as well, I would advise you watch this video too. The video I tagged to it. So this is February 29. All right. You would find it under my highlight post, so you don't need to bother. When I was making the video, I've already entered this. When I was making this video, I was explaining divergence there as well. So you can watch this particular video over and over again as well to understand the basics. The hint is already there, and this was my first target. And when I entered, price has not even gotten to all these targets here, and I projected further to give you hint that I'm still bullish. All right, you can see that here. So that's just it. So I'll see you guys in the next one, right?